Gold is making its way through the headlines. The metal is usually seen as insurance against currency devaluation. When I first started buying gold in 2020, the metal was sitting around $1,900 an ounce. And today, at the time of this episode recording, 1 ounce of gold is sitting at over $3,300. And it could possibly go up even more depending on the headlines. So today, in order to better help you understand what's going on with the metal and why you should be paying attention to it, we have an expert in the field that's going to tell you everything you need to know about gold, why you should care, and in the event that you want to invest in it, how to proceed in a way that it's safe and help you get your money's worth. And here we are with our very special guest, Kamil Montani, one of the owners of New York Gold & Co. Kamil, welcome to our channel.
Thank you for having me. Thank you for your time.
Thank you. It's an honor for us to have you here. I know you're a very busy guy, and we feel very lucky to get a piece of your time today and talk about this very important subject about gold. So you're the expert in the field. So tell me what's going on with gold. I know it's making its way through the headlines, and everyone seems to be paying attention to these precious metals. So let me know, or let us know, why should they be looking out for it?
It's not just one factor, it's a multiple thing that's going on right now that's put gold in the headlines. It has to do with the inflation, number one factor being the inflation. Number two factor being the economical and geopolitical scenarios that's been going on in the world right now. Number three has to do with the supply and the demand. So to break it down, inflation and gold has always been inversely proportionate. When the inflation is high, people like to hedge their money and their savings against gold. And gold is known to be an entity that always keeps up with inflation as opposed to your regular fiat currency, which is your dollar per se. Now, talking about the geopolitical affairs, gold traditionally has known to be the reserve currency, the true reserve currency, I must say. And what's happening in the eastern hemisphere of the world, like with the BRICS nation, Brazil, Russia, India, China, South Africa, wanting to move away from US dollar as their reserve currency and wanting to back it up with a tangible commodity, and that primarily being gold. So with them dumping a lot of US dollars and starting to invest in gold has also caused the price of gold to go high. And anytime the economy is going through a slump, which we have seen in the last 1 year with the ongoing conflicts between different nations, the economy and the trade of those countries and primarily of the entire world gets affected. And in such times, the spending people like to save and hold on to their cash.
Right.
Now, when I say holding on to their cash, I mean a lot of people who look ahead want to convert that cash into gold, into a tangible commodity that keeps up with the value of time and with money instead of keeping that money in the bank account.
Right.
Per se, because the money in the bank account that you keep stays as is, doesn't grow with inflation, even with the minimum increment that you get on your savings account, as opposed to gold. For example, in the last 5 years, if you see the year-on-year percent increase of gold, in 2020, gold went up 25% compared to the previous year. 2019, that was 14.5% up. 2021, it went down, but only 3.5%. 2022, again, it went down, but only 0.4%. And again, in 2023, it was up 14%. So if you look at the price of increment of gold from 2023 to 2025, it's gone up 69%.
Yes.
That's why more and more people are getting educated. Like, internet has made the entire world a very small place, and there's immense amount to learn about everything. As far as investment goes, people are getting more and more aware, more and more educated. They want to be more secure with their finances, more diverse. And when you talk about secure and diverse, there's only one commodity that comes to mind after real estate, that's gold.
Yes, I completely agree with you. It's one of those assets that allow you to protect your money against inflation in tough times. And everything that you just mentioned, it's something that I've been observing over the years. When I first started paying attention to gold back in 2020, that like the asset in itself has an inverse relationship. So when certain assets are going down, like you will see the price of the gold going back up. And so it's not so much, in my opinion, about about timing when exactly to go in and buying the asset. The way I see it, it's more about having options, right? So when it comes to the time when you need to liquidate, or maybe a real estate deal comes up, or maybe there's a family emergency, that you have different options for you to choose from and say, hey, well, this asset is not doing so well, so let me go to this one and try to get access to that liquidity that it's so much needed at that time. And so with that said, we have mainly in our channel, a lot of our followers are focused mainly on real estate investing. But since we're on the topic of gold, so when people go out and try to figure out, okay, what type of gold should I buy? Like, what do you think they should be paying attention to? And it's typically not jewelry. Most people think, oh, if I buy a piece of jewelry, then I'm set. And I mean, it's a nice to have, but that's usually not what people should be aiming for.
So when it comes to investment, primarily it's either gold bars or bullion coins that people buy into. The problem with jewelry is you cannot make jewelry out of a 24 karat pure gold, because gold, 24 karat pure gold is soft. And for jewelry, you need to make an alloy. How you do that is by adding other metals to it, which brings down the carat from 24 karat to 22 karat, 18 karat, 16 karat, so on and so forth, which makes the jewelry hard and durable. That's what you need for wearing purposes.
Yes, to be able to forge it and stuff.
Yes. But when it comes to investment, pure investment, it is smart to have gold bars, 24 karat pure gold bars, because A, again, it's 24 karat pure certified gold bars. And B, you're not paying for any making. When you buy a jewelry, they charge you based on the design a making fee. Now that making fee is lost when you go to sell the bar. Not only that, the impurities have to be counted for. It's not, as I said, completely 24 karat, depending on how big, small, heavy, intricate design you make. The carat of the jewelry keeps dropping. So from a purely investment perspective, I would only recommend 24 karat gold bars or gold coin, depending on. A lot of people like to collect gold bars, gold coins, whether it's Australian mint or Swiss or African, depending on the design they like on the gold coin. But gold bars are like the priority items that people usually buy to invest.
And you actually have a pretty diverse crowd that goes into your store, whether it's physically or online. So you notice that in your experience, the majority of them prefer to go with gold bars. But why? Like, what's the reason why they prefer that?
Primarily because gold bars are a little cheaper compared to gold coins. And I'll tell you why. For example, if the mint produces, let's say, 100,000 gold bars every day, compared to that, they only produce maybe 5,000 gold coins. So the cost of production on the coins are more. They don't produce, and there's so much variety in the coins. There are like so many different kinds and types and designs that for each design, their production is not as high to compensate for that premium that the mints charge, right? That's why gold bars are a little cheaper compared to the coins. Coins are known to be a collectible item. Meanwhile, bars are known to be an investment item, not a collectible. If there's a coin like a Chinese lunar calendar, every year there's a different design on the coin, right? So if you're like the year of the horse or year of the rabbit, and you want to have that particular coin in your closet as a memory that, you know what, this was the year, this is my year, and I'd like to have a coin to remember that, then by all means, sure, people do that. Don't get me wrong, there are people who like to buy coin in bulk as well to invest, but they will lean to be a little more expensive compared to the gold bars. And as I said, gold bars are produced in a quantity which offsets the production cost, and hence they're a little cheaper. Even though they're both 24 karat gold, it's still cheaper to buy gold bars.
Right. And now, since you mentioned different countries, does the country impact the pricing at the time of buying and also at the time of reselling? So, for example, I've noticed before I knew about bars, I was more into coins because I did my research at the time. The information at the time was a little bit more limited. And I remember that it was always between the American Eagle coin or the Canadian Maple Leafs. And it was always the two. But I also noticed there was a big difference. Well, not a big difference, but sort of like a difference in pricing. And I also noticed that the American coin had less carats than the Canadian one. And yet the American coin cost more than the Maple Leaf.
even though the American coin has less carats, it's 22 carats, but the weight of the coin is 34 and change, which kind of makes it equal, even though it's less in carat, but the weight is more, hence the price of the 1 ounce is matched, right? That's how coin works. But as far as the country of origin of the gold, it doesn't matter. The price of the gold is gold.
Okay.
It's set by a committee in London twice a day. Once at like 5:30 in the morning, and then the second time at 10:30 EST. These are the 2 times during the day, every day, that the gold price is decided by the committee in London. And that's done primarily based on the market volatility and the supply and demand. For example, if there are a group of 5 people sitting on that bench and 3 of them want to buy gold, that day the price of the gold would be up because 3 big players are buying gold, which means there's a demand for gold that day, right? For that session. Hence, the price of the gold would be charting up. Likewise, if 3 people decide that, their big customers would like to liquidate, the price of the gold would be down. So the price of the gold is not dependent on the origin of the gold per se. It's whatever the spot price is, that's the price that you pay. Now, where the price differs though is, as I said in my previous point, it's the different exclusivity of the coins that you get. If you're looking to get like a coin that's like a Chinese panda, or a snake, or a horse, or a rabbit, those coins do come with a little premium because they are not produced in that big quantity and they're very limited. It's like the supply and demand, clearly. Again, the quality and the purity of the gold, it's the same. You're just paying extra for that want of yours to want a panda coin, a horse coin, or a rabbit coin. It doesn't have anything to do with the purity of the gold. You're paying something extra for something that you really, really want.
Right.
But as far as the gold goes, the spot price of the gold is the same.
And so for those who are brand new, because I remember when I was doing the research years ago, like had to learn everything about the spot price, where to find it, and then how to be able to determine what was the right price range, because every gold dealer is different, and supply and demand determines a lot of the different price points that one consumer can come in and enter. So if okay with you, can you help explain the audience what exactly is the spot price? Where can they check what the spot price is? And then what pricing range can they expect? Because it's not like if I see a spot price, that's the price I'm going to pay when I go to your store, right? So like how will they be able to do the proper research and know for a fact that they're making the right decision and that they are going to a dealer that can be trustworthy?
So spot price, think of spot price as the price of the gold coming out of the mine. That's not the gold that we get. We get a finished, packaged, marketed product, right? So the spot price is the price of the gold that comes out of the gold mines, right? Then that gold gets minted into casted into bars, gets stamped with an image of the Lady Fortuna or a maple leaf or a kangaroo, whatever they may be, right? Then it gets stamped and embossed with that image. Then it gets packaged, advertised, gets shipped from the country of the mint. Pamp is one of the most selling mints. So it gets shipped from Switzerland to the country of origin, where destination, in this case, New York, right? And then the marketing cost. Now, us as New York Gold Co., we are one of the certified distributors with the mint directly. So we don't have like a third party in the middle. We directly buy from the mint. Now, what the mint does is they add a premium. A premium is everything that I just described, which is casting the gold bar, stamping it with a photo, packaging it, shipping it over here, and then selling it. All that is called a premium. So the premium is added on top of the spot price. Whatever the spot price may be on that day, then there's a premium that the mint, the company manufacturing gold, adds to it before selling it to us. On average, the premium keeps changing with the demand at times. With the ongoing tariffs right now, the premiums have been a little haywire and abnormal because there have been talks of adding a 10% tariff to the gold. But I don't think it's going to sustain. It's being challenged, and I think hopefully next month we should have a verdict that the premium has been relieved of gold.
Wow.
Because on investments, you can't have a 10% premium as suggested by...
It's like you're being punished for wanting to invest your money.
Yeah, exactly. So that's not going to stand. But what that does is that creates a frenzy in the market, that creates a shortage of supply, and that creates the price to go up. And primarily from the mint directly, not from the second market, but from the mint. The mint adds that extra premium before selling it to distributors like ourselves, right? Because they know the supply is limited. The mint has stopped shipping to the United States because of this ongoing premium war, and hence the premium goes up. But on average, I would say to a retail buyer, the premium should be between $100 and $150, depending on where they buy from. A lot of people who are not direct distributors, they might buy from somebody like me,
and then resell.
And then they resell it. So
they have
doing
to
so,
more.
they add a little more to it, as opposed to buying directly from a distributor like ourselves, right? So to educate the retail customers or investors when they buy, I would suggest going to somebody who's a direct distributor from the mint, who directly buy from the mint and not from a third-party seller. As far as checking the price of spot price every day, there's a website called Kitco. They can go on that, or they can come to our website. It's New York Gold Co. Inc. And we have
the pricing is right at the top.
Yeah, we have pricing right on the top, and on every item. When you click on any item, we show the sell price, but on top of it, for complete transparency to our customers and education, there's a live spot price. So they can clearly see, okay, this is the spot price and this is what I'm buying for. There's no hiding anything when it comes to gold. We like to be as honest as possible with our customers and as informative that, you know what, this is the price of gold today and this is what you'd be buying at.
Yeah, and that says a lot about the brand, because for a business to thrive long term, because you can do one single transaction here and there, but you want repeat customers. You want customers to keep referring your brand. And the best way to do that is by educating your consumers on how to make the right decision. And one of the things that are very interested about gold is that depending on the time of day, that price fluctuates. I didn't know that when we first started buying gold. I first thought it was like something that will change every couple of weeks or possibly months. I didn't know that the gold price will change like multiple times throughout the day. So you can go to the store and check out a price at 10 a.m. And then you go to the bank, you get your cash, you go grab lunch, and by the time you come back at 2 p.m., like the price it's completely different. Not by a lot unless something crazy happens in the news, but usually you can expect to see some changes, even though it's within the same day.
We have a lot of customers that come to the store and they ask what the price of gold is. We present them a price, and then they look up on our app. We have an app on iOS and Android as well. So they'll look up on the app, and in that meantime, the price might have gone down like by $1 or so. And they're like, oh, well, on your app, it's this price. So just to bring home that point that yes, the price keeps fluctuating by minuscule, not that much, maybe $1 or $2 here and there. In the entire day, it probably like jumps whatever the market jump is. Like in the morning today, it started at like, negative $26, and now it has kind of like settled to a negative $20 today. So it does keep like 19, 18, 20, 21.
Yeah,
it keep like
the day.
that range, in that range. But as I said, the two resources that are informative for any customer looking into buying gold, silver, palladium, rhodium, whatever metal they are into, is Kitco, and obviously one of our websites they can log on to, and they can check the live price of gold.
Yeah. Thank you for sharing. And definitely very informative, like little things that even I didn't know, even though I've been studying gold for quite some time at this point. It's been a tremendous resource. Before we jump on the next point, I'm going to go back to the mentioning you did of the other metals, right? So there's gold, there's silver, there's palladium. So Anthony and I have purchased both. Silver and gold. Over the years, we realized that there's more of a stable retention, so to speak, when it comes to gold, because silver fluctuates like very drastically, and depending on the time that you need to liquidate the metal, that also comes into play. So any particular reason in your experience you think why someone will want to go to gold or silver or palladium? Because I remember when we first started doing checking out the palladium prices, they were through the roof.
Yes.
And now it's like seeing the price crash. So like, why would someone pick the different metals as opposed to just going to gold, which in our prior conversations, it's been a metal that has stand the test of time, like centuries and centuries ago. So why all of a sudden the introduction of these different metals, and why should they pay attention to it?
It's all a matter of choice. If you purely want to secure your money, and as an investor, myself, if I were to do it, I would always select gold as the metal of choice, right? Because if you take it all the way back in time and see how the currency was invented after the barter exchange, gold and silver were the ones that were traded against a note, a bank note, right? That's how the invention of currency came into place, where vendors and buyers, they would take the note from one town to another town and withdraw those amount of silver or gold coins. Now, that's why gold would be the choice for investment. As far as palladium, rhodium goes, again, it's just a matter of choice. And at that point, you're basically trading into the price and not so much as the viability of the metal and how it has performed over the years and stood against the test of time. But to secure your money, I would definitely bet on gold, and silver. Bet would be an incorrect word, but I would say invest your money in gold or silver, because it stands inflation year on year. If the inflation is 3%, gold goes up by 6%. So it does stand on that. And silver is one of the metals that's considered to be a long-term growth metal, meaning it might not show you yields in a year or so, in a year or two, but eventually over the period of years, especially with the invent and reliance on more and more electric vehicle, silver as a metal has been talked about recently a lot, and people have been looking into it and heavily investing into silver as well. But gold still remains the
right
choice.
Right. And that's one of the reasons why we consider silver back in 2020 when we started buying the metal. And it had to do a lot with the fact that electrical vehicles are becoming a thing. Cell phones apparently were starting to include silver as opposed to gold because it's a much more affordable option. And I remember at the time, silver was at the top. And recently we started monitoring the pricing, and we noticed there was a 20% drop in silver. And so to us, that was kind of like a lesson, right? It all comes back down to the options that you have when it comes to liquidating. And so for those who have been following our channel for quite some time, we recently acquired a $2 million project in which part of the down payment was through the liquidation of the precious metal. So we liquidated gold with you guys and part of old silver. But a different dealer at the time, because you guys were not buying silver at the time, because it's all about, like you said, supply and demand. So if there's no demand for silver, then the gold dealer has no reason why you should keep stocking up the metal.
We still do, actually. We still, even when the demand is less, we like to accommodate the customer in every which way possible. For example, for the past 1 week, the price of gold is kind of high compared to what it was a week and a half or 2 weeks ago. And
so now it's changed.
So now all the time people are literally all day people are coming and just selling it and instead of buying it. And we can't say no. We thrive on the fact that we tell our customers we buy from you, that gives them the assurance that what, this vendor is a trusted vendor. This is a guy this is a business that we can rely on. We buy from them, and should we need the money, we go to them and sell it. Now, if in those times I tell the customer that, hey, I'm not going to buy it from you, for whatever reason that may be. That's not right. So we really try to, accommodate all our customers' needs, when they come, whether the price is high, low, whatever they may be.
And since we're on the topic of selling the gold, so the calculation, it's different from when you're going to go to the store and say, okay, what's the right price to pay? So for anyone who's out there with a piece of gold that they're looking to liquidate for whatever reason, emergency or investment purposes, how should they determine, hey, I can trust this dealer, that this dealer is giving me a fair price for my piece of metal?
when they come to sell gold, like, if you're talking about jewelry, we do have X-ray machines that can verify.
Yeah, my husband and I, we saw that.
Yeah.
It's a fun machine.
It's an expensive piece of equipment that we've had to invest in, obviously, because we want to be careful of what we buy, right? So we can give you the purity of the metal that you bring into the store right away. We can even give you a detailed report of what the purity is. For example, in jewelry, as I explained earlier, that there are many impurities that they add to make it into an alloy, not just gold, to make it stronger for jewelry purposes. It can exactly tell you how much gold you have, how much zinc you have in it, how much copper you have in it, right? And what carat that piece of jewelry is. And based on that, we present to you a price that we buy it at. Now, that's jewelry. As far as the gold goes, the gold bars, so long as they are in the package that you purchased it from, whether it is from us or to any other gold supplier, so long as it's in the package, it has a certificate etched on the gold bar. It has an SA certificate number. Now, SA, I'd like to elaborate on this point. SA is an organization that is controlled by governments of different countries. They have different parameters, different guidelines to certify each and every bar of gold that is minted and put a certification stamp on it, which is etched on the gold piece and also imprinted on the plastic packet that comes out of it. Now, it's not just a random private entity that does it. It's the government, it's the London bullion market of gold that sets the price, that's involved in making sure that it is regulated and done correctly. Then it's the government of the country that the gold is minted from and the country that it comes to. So there are a lot of big genuine entities that regulate and ensure that the SA certificate is, the process of it is done correctly. If the customer comes to us and sells a packaged gold that's like in the certificate, then there's no question, it's a 24 karat gold, right? But still, we do check it. As I said, it takes literally seconds.
It's really fast. Like you take the piece of the tool. My husband calls it, he calls it a gun. So he actually wanted to buy one. I'm like, we're not buying one of those.
If you want to spend upwards of $20,000 in shit.
I'm like, we're not buying one of those. We don't have that much gold to be testing it. But it was fairly quickly when we showed up with our little points. We said beep, 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 and that was it.
Yes. So by that, and a good thing is, if you notice, take different denominations of gold bars. The size, the cutout size, the length, width, and the depth of it are precisely made to only hold that size of gold.
Oh, I see.
So, for example, if in a 1 ounce,
it's very hard to counterfeit.
If in a 1 ounce cutout somebody tries to put in, let's say, a half an ounce bar, it'll not fit. It will not fit. So those are the measurements taken by the mint that makes it. And if it does fit, the weight won't be correct, so on and so forth. So when they're selling gold, if it's in a packet, what most traders do is they take the spot price of the day that the customer comes to sell it. And, depending on the supply and demand and the market needs, they'll probably deduct like 1%, 2%, 3%, some deduct even more, which is not, to each its own, right? We have a different model where if our customers buy from us directly, like if they've come to the store and purchased gold from us and they want to sell it back to us, we give them the entire spot price. Whatever the spot price may be, we give them that. And again, as I said, depending on the demands.
Great stuff. We didn't know that. Well, we didn't know about you back in the days.
And that's why a lot of people feel secure when they deal with somebody like us. I'm sure there are many others like us. I'm not tooting my own horn, but we like to be transparent, as I said, with our customers, and we like to we take pride in how we service and deal with our customers.
I mean, Anthony and I have dealt with many different gold dealers throughout the years. And for some reason, I don't know why I couldn't find you at the time. Maybe I wasn't doing the right search. But when I finally found you last year, like the interaction with your father-in-law as well, like it was just purely educational. So like it went hand in hand with how we like to run our educational community, right? Like it's all about transparency and showing people, hey, how to best make the the most out of your money, especially in difficult times. And so we really appreciate the time that your father-in-law took to educate us and even your time here today. Now, before we end this interview, are there any special considerations you think our audience should be paying attention to? Because I know you and my husband were talking earlier about like taking the gold out of the country or something like that. So I don't know if that's something you want to share. And if there's more, please share away.
As far as the consideration goes, I mean, just have to be sure who you're buying from, right? Because as I said, there are like many people who don't directly buy from the mint, which makes the price go a little up because they buy from people like us who are distributors, and then they add their own percent markup to it before selling it to the end user. Or even other big websites where they sell it, but they don't buy back. They're only into that one-way business. And we get it all day, every day. Like, people come to us saying, hey, we bought it from so-and-so website and we'd like to sell it to you. We take them all, like, we accommodate all the customers. And that's how we build our customer base. Because any business, not just gold, like, for example, if you buy a piece of garment from somewhere, right? And if you go to that shop saying, hey, I don't like it anymore, I want to give it, not saying you used it and you're returning, but unused, right? You're returning it. And if they refuse to buy it, wouldn't that leave a sour taste in your mouth? Like, come on, I just bought it from you. I changed my mind. So these are small lessons that we take and, incorporate it in the way we trade and do business with retail and even wholesale customers, that we buy, no matter where you buy gold from, this is a place where you can come and sell. And obviously, there's much more of an incentive if you buy from us and resell it back to us, as opposed to buying from somebody else and selling it to us. Now, as far as carrying gold, everybody must do their due diligence into how, if they're taking gold out of the United States, we are no one to advise. We're no immigration expert or, import expert to advise how they should take it outside the country. That depends on the law of the land that they're taking that metal to. What their regulation is, what their limitations are. They need to look into that. They need to speak to the import agents, so on and so forth. But as far as selling goes, we can sell in any quantity, like, starting from 1 bars all the way going to sky's the limit, like, from investment purposes as well.
Thank you. This was very informative. For those who would love to get in touch with Kamil and his team, here's the website that you see on the screen. You can also check the website down in the description box and also in the comment section. And if you happen to be in New York or New Jersey or even Pennsylvania, why not? And you feel like driving into the city one of these days, you can check out where their address is and their location, and you can pay them a personal visit. Kamil, thank you so much for your time today.
Thank you, Lou.
Thank you. Take care. Bye-bye.